welcome in. We'll get started in just 1 minute. Hello, hello. We'll get started at 7:20. We'll give it 6 minutes. Let's see.
Only 12% of women-owned firms actually surpass $100,000 in annual revenue. I'm going to show you how to land a single corporate client that can replace the revenue.
welcome in, welcome in. It's 7:20. Hi, my name is Sierra the Wealth Empress. If you are new here, I am your day trading and credit specialist. All right. So we have been starting our beginner's course on what's today? Monday. On Saturday, we finished the Candlestick Bible book. And if you don't know, the Candlestick Bible is a book about candlestick patterns that you'll look for at zones. So if you missed that, the link to my bio, the link to my YouTube is in my bio, and all of the recordings are there, so you can go back there and refresh yourself. Today, we are going to go over zones, okay? And if you look at my chart, this purple area here is a zone. This is a zone. This is a zone. Zones are areas on the chart that you look for your exit and your entry, okay? So I have gold up here. I already have gold marked up, and I'm in a gold sell, so I'm not going to touch this chart. So, okay, I have a blank chart right here, which is CHFJPY, okay? So in trading, there are 4 different kinds of zones that you can mark up, okay? The first zone is called a fair value gap, okay? A fair value gap, and also known as an inversion. I guess I turned my caps lock on. All right. The second one that you hear a lot about is support and where's my and sign? And resistance. Okay. Is that right? I don't think there's 2. Support and resistance. The third one is supply and demand. And the fourth is order blocks and reclaimed order blocks. Okay? All right. So with each zone, as you can see, there's an and in between, right? So one zone will be a buy zone, the other one will be a sell zone, right? So supply is a sell area, demand is a buy area. Support is a sell area, resistance is a buy area. Now, when it comes to fair value gaps and inversion fair value gaps and order blocks and reclaimed order blocks, they can be either a sell or a buy. It just depends on what it was originally, right? So it'll make more sense when I start to point them out on the chart, okay? All right, so, but with this one, let's do this. Supply. Sell area. And demand is a buy area. Okay, and support is a sell area. I'm making sure I'm saying that right. Support is the floor. Support is a buy area. And resistance is a sell area. Okay? I'm confusing myself right now because I don't use support and resistance often. I mainly use fair value gaps. Support is the floor, so don't let me confuse y'all. I had to double check. Okay, support is the floor, which is a buy area. Resistance is the top, which is the sell area. Okay. Supply is a top, right? So when you have too much supplies, it normally goes on sale. So that's how you can think about supply, right? And then when you have high demand for something, they normally mark the price up and a lot of people will buy it because it's in demand, okay? If that makes sense. So when you have too much of a supply, they're going to put it on sale, okay? And when something is in demand, everybody's buying it, okay? So that's a way to think of supply and demand. So these are our 4 different kinds of zones, okay? Fair value gaps and inversion fair value gaps is what we're going to touch on first. A fair value gap and an inversion fair value gap is when the market makers is what they call it, but it's basically the banks, right? Because in trading, you're trading with the banks, okay? So it's when the banks put so much money into the market that it leaves a hole in the market. So they drop in, if you don't know, the Forex is a $1 trillion industry. So they come in and they drop $1 million on a position and they put so much money in it, it just pushes, right? Pushes a lot of force and it pushes so much force right here, it leaves a hole. And give me a second, let me take my crosshairs off because I want y'all to see this area. Um, okay, so right here, if we come over here and you look on the chart, you see this big bullish engulfing candle. And in this candle, let's zoom in. In this candle, there's a hole. See that? Because the market makers came in and they're like, okay, we're going to buy. Whoever thought this was a sell, right? Because they saw these two pushing down, the market makers came in, they aggressively pushed this up. They aggressively pushed this up so bad that there's 2 holes in this area. Okay. So that is called a fair value gap. All right. So this is a zone right here, a fair value gap. Now, we have another fair value gap here, right? I said we had 1 hole, 2 holes. So now what you want to see with the fair value gap, okay, I take my rectangle tool over here in my toolbar and I use my magnet tool also. In order to draw a fair value gap, you want to start at the candle before, okay, this previous candle. So this candle gave me my fair value gap. I want to start on this previous candle and I just want to come to the top of that wick and then I want to draw a rectangle to the candle after it, okay? So from this wick to that wick. And I use my magnet tool because the magnet tool will automatically just draw where you want it. It'll like grasp to that wick so that you're not kind of trying to guess on where to put the lines at. So if I do it without the magnet tool, you see how I can accidentally just not get it as clean. But with the magnet tool, it automatically just grabs that wick. It just grabs to wherever I put my crosshair on. You see that? Okay. So from wick to wick. Okay. So this is how we draw a fair value gap. So with the fair value gap, you want to see price come back into the gap. I mainly like to wait for them to come back to 50%. So me personally, I would have missed this entry. Okay. But if you see right here, we had another fair value gap. I marked this one up. Price came back to 50%. So this would have been my entry. Okay. So this is one zone. That's a fair value gap. Now, an inversion fair value gap, I'm going to mark this gap back up real quick. An inversion fair value gap happens when price trades through the gap and then comes back and retests it and now sell. Okay? So this is a bullish fair value gap because this is a bullish candle. I was looking for price to come back to this gap and buy. Now, in order for it to be an inversion, you want to see price trade through it, retest it, and then sell. Okay? So an inversion means opposite of what price was going to do. Okay? So we had a fair value gap. This is a regular zone. You draw it from wick to wick when you have a hole and the market makers put a lot of money into the market. Okay? You want to see price come back to it and then trade away in the direction of the candle that created the gap. So if you don't know, my black candles are my bullish candles and my pink candles are my bearish candles, okay? So if you understand the difference between a fair value gap and an inversion fair value gap, say yes in the chat, and then I will move on to number 2. If you don't understand, let me know. I'll find another example. All right? Yes, thank you, Chris. We got a few other people on here. I need at least 5 yeses, please, so we can move on. Because the purpose of this is to learn. So let's learn. If you don't know, it's okay. A lot of people here are new. Which fair value gap time frame works best? So that is a long debated question, but it's really not about a time frame, right? So if we're on our monthly time frame, we know that we're looking for swing trades because you're trading off the monthly. If you're on the weekly, you're looking for swing trades. If you're on the daily, you can look for intraday to swing trades, 4-hour intraday to swing trades, hour more so intraday. If you're on the 30-minute, you know that you're not looking for a swing trade. You're going to look for an intraday trade off a 30-minute or a scalp. Okay? So it's not the fact that it works the best. You just have to know how long you're going to hold the trade depending on what time frame you're on. What's a swing trade? A swing trade is when you're holding it for 2 or more days. What are we trading, Ray? We're not trading anything right now. Actually, I'm in a gold sale, but I think it's too late for y'all to get in. We are doing our zones, okay? We're learning zones. So I hope that answers your question. It's not about what time frame it works best, because it works on all time frames. I literally can go down to the 1 minute and find a fair value gap. Let's delete this real quick. Fair value gap. Price didn't come to the 50% on this one. All right. Another fair value gap. Price didn't come to the 50%, but it did come to the zone. Price brought up. It came back, retested the zone again. Price brought up, came back, retested the zone again. Price brought up. It's not about time frame. Did I delete my notes? Okay, no. I think I did. But it's not about what time frame works best, right? You just have to know that on certain time frames, you're not going to hold a trade as long, right? If I'm on the 1 minute, I'm looking for a scalp. So price came back down to here, your exit would be the last high. All right? Unless you're combining your 1 minute with higher time frame analysis and you're just using your 1 minute for entry. So fair value gap is just a long bullish candle. No. Nope. Fair value gap is a hole in the market. There is a hole there. So here, if we look and zoom into this candle, right, you see that gap. But if we look at the previous candles, you see how this candle traded back into this candle and this candle traded back into this candle. Like normally each candle is going to trade back into the other candle unless you get a gap. Now this one traded back into it, but it didn't fully trade back in to fill in this wick. Okay, so that's the difference. Okay. So there's a hole. It's just not a long candle. Okay. Yes. Thank you for asking that question. I need 3 more people to let me know they understand what a fair value gap and an inversion fair value gap is. Let's zoom over. We can find one more right here. And the more you train your eyes to see them, I promise you they just pop out to you as you're going through your charts. It's fair value gap right here. I'm going to zoom in right here. From wick to wick, there's a hole. Okay? But if we look at these other candles, there's no holes. We come back to this one, there's a hole. There's a hole here. No holes here. There's a hole here. There's a hole here. Those are fair value gaps. Okay? What pair is this? This is CHF-JPY. But you have fair value gaps on all pairs, on everything. I mean, I can come over here to US 30, and this is what we marked up earlier, some fair value gaps. And as you can see, our zones are holding up. Okay. This is a 4-hour fair value gap that price is rejecting right now. Earlier today, price rejected. I think this is what time frame is this? See a 30. It's a 30-minute gap. Okay, so it doesn't matter the time frame. It's by other. I don't understand your question, Painter. It's by other. So are you asking if it's a buy or sell? How do you know if it's a buy or sell? We can go back to CJ, right? And if we look at this fair value gap, again, my candles, my buy candles are black and my pink candles are sell. So this black candle gave me this hole and it's a buy candle. So that's telling me that it's a bullish fair value gap, okay? Price is supposed to come back into this zone and then buy from this zone. But remember, if price trades through it, then it becomes an inversion and price will sell from this zone, okay? So what's supposed to happen is price gave us a fair value gap, price traded away from the gap, price is supposed to come back to the gap and then continue higher, okay? If it doesn't reject and continue higher, it's going to sell through the gap, retest the 50% of the gap, which is my blue line, and then sell, okay? And I got my blue line. This is a rectangle. If we double click the box, I just have the middle line checked, okay? Sometimes I use background, sometimes I don't, because the main thing that I'm worried about with my fair value gap is the 50%. I need to see a 50% touch. So we can come over to one of these pairs. I saw it in real time. It's happening here, okay? So Euro odd, right? We got this a big impulsive push. Nope, it didn't come back to the gap. Let's find one that did come back. Okay. Here on Euro CAD, my stop loss hit, but this just did everything that we needed it to do. We'll come back to the hour, okay? Now, here on the hour, you see we have this impulsive move, okay? We have this bullish fair value gap. Originally, right here, you see that? Price traded up, came back, retested, went higher. It did exactly what it was supposed to do. And then also, price decided that it wasn't going to push any higher at this moment. It sold through and retested it and then went lower. This did exactly what it was supposed to do. So I'm going to remove these lines. Let me try to zoom in a little bit more. So this one This one fair value gap gave me a regular fair value gap entry, and it gave me an inversion gap entry. Okay, so fair value gap, we got a hole, price brought up, came back, retested it, rejected, went higher, decided it wasn't going to hold as far as high as it was going to go. It came, traded through, retested it, and then rejected it and sold. I don't think this example could be any more perfect. Okay, so that's an example of a fair value gap and an inversion fair value gap. So since it went past the fair value gap, does that indicate anything? I don't understand your question. Since it went past, are you talking about now since it's on top? Does that mean anything? So if that's what you're saying, right? Now we saw price reacted here, it reacted here, it didn't go any lower. Now it's back on top. So yes, that indicates that it wants to buy now because it got back on top of our zone. Okay? Paired with our candlestick patterns. Okay? Here we got an inside bar candlestick pattern. This one and this one. We just finished talking about our candlestick patterns. So this right here is an inside bar candlestick pattern at our zone. Entry would be at the top of the mother candle or at the bottom of the mother candle. And as we see, price traded back through the fair value gap. It got on top of this mother candle and now it's buying. Okay. Hey, Kay. So hopefully that answered your question, KBB1, something like that. All right. So hopefully you guys understand inversion and fair value gaps as far as zones. Okay. And again, our zones are our entries. Our zones are our entries and our exits. Okay. So that was inversion and fair value gaps. Now we can go to support and resistance, which I said is mainly the main one that's talked about, right? So with support and resistance, you need at least 2 or 3 areas of rejection, okay? So remember I said support is at the bottom, which is the floor, and resistance is the top, which is the ceiling, okay? What is a liquidity sweep? We're not talking about liquidity sweeps today, but if you stick around to the end, I will tell you guys what a liquidity sweep is, okay? Right now we're doing zones, okay? So support and resistance. All right. So again, support is the floor, okay? You think of it as it's holding something up, it's supporting it. And then resistance, you think of it as a ceiling. It's hard to break through resistance, right? When you're trying to go to a next level, there's always resistance, so the top. So you need 2 or 3 points of rejection. You can just come to your chart, right, and find an area to where it looks like price is trying to hesitate to break through. And off the bat, I see this area right here. I have one. Let's see. I have 1, 2, 3. 3 areas of rejection within this area. Okay. So again, I will use my same tool, rectangle tool, and I'm just going to start on my first area and bring it up here to my last area, which is the highest. Let's zoom in some so y'all can see it. All right. So I just started here and brought it up here because this was my last area of rejection within this area. And as you can see, it's the same thing that we're looking for when we're using our fair value gaps, right? We're looking for price to trade through it, retest it, continue higher, or come to the area and reject. Come to the area and reject. Come to the area and reject. Okay? So you're looking for either rejection or a trade through and a retest. All right. So that's support and resistance. So this one is resistance. And let's find a support area. And right here, I see 1 and 2 areas of rejection. 1, 2. Okay. And you want them to be in the same area, right? And I'm just going to mark my zone, and I'm going to extend it to the left because also on the left, I wanted to have some type of reaction on the left also. So if I marked these 2 areas up, I extended it to the left, and I just want to zoom out to see, did price hesitate in this area further back? So here it almost reached the area, but not quite. Just want to keep looking until, let's see if anything is over here. Let's go to the 4-hour. Ain't nothing over here. Looks like CJ hasn't been this high in a long time. If I look at it on my daily rate, CJ, this is where it currently is up here now. It hasn't been this high in a long time. So I don't have anything else over here to my left. But any other time, let's go to Euro odd. Looks like it's high. GU, we could do that and delete this and go back to my hour, and then I'm gonna find another what were we doing, support area. Okay, so here I have rejection, rejection, rejection here, here, and here. And if y'all could do me a favor, just tap the screen while we're learning today. I greatly appreciate it. I like to get the live up to 10K so that it can be pushed out so more people can come in here and learn, okay? All right, so we got 3 areas of rejection. I just draw my zone, right? And then I zoom out and I want to look to the left. Did price also react to this zone? Let me know, yes or no. My phone finna die. Yes, yes it did. Right? So I marked this area. So a lot of times with support and resistance, what was once resistance becomes support, right? Because resistance is the top, support is the bottom. So as you can see over here, it was resistance, right? Price finally traded through, came back and retested it, and now it's support. Okay? This is why I'm always looking for a break and retest. It doesn't matter what I'm trading. I want a break and retest, okay? Trend lines, zones, anything, okay? So that's support and resistance. It's a lot easier than what we make it seem. We kind of tend to overcomplicate things because a lot of times with the market, you can learn to read the chart and then you be so desperate for money that you mess yourself up. Psychology is the hardest part in trading. Reading the charts is actually the easiest part. So these are different kind of ways to look at the chart to break it up. Yeah, because when you're trading, we're really just trading from zone to zone, right? So if I go to gold, I'm currently in this gold sell. And I'm looking for it to come to this zone here, okay? Or I could look for it to come to this zone or this zone, but because of what I know with Fibonacci, I'm looking for it to come to this zone, okay? Yeah, it is. You're right. You're just looking for ways to break the chart up, okay? So here, I had a zone. I had a fair value gap. I looked for an impulse, right? I got a correction back to my zone. I got my price action signals, and then I took it to my next zone. Their entry and exit areas. Yep. So that's how you break the chart up. All right. So now, let me know y'all understand support and resistance. If not, we can find another example. And I need to get my phone charger. I'll be right back, y'all. All right, sorry about that. All right, I'm back. We gonna block Robert Wilson and Villette. They look like two bots. All right, so are we good on support and resistance? All right. Now, next we are going to talk about supply and demand. In my opinion, supply and demand and order blocks is the exact same thing, okay? Question. Let me tell you. No, it's fine. Interrupt. That's what we're here for, to ask questions. Um, so my middle line is 50% of my zone, okay? And I like for price to touch my 50% before I do anything. So if it doesn't touch my 50%, I'm not going to trade it. So like USD CAD here today, I only had this 4-hour zone marked up here. I had this 4-hour fair value gap marked up, and price came back to the zone, but it didn't come in the zone and it didn't touch my 50%. So I didn't buy. And then I came down to the hourly time frame to see what price reacted off of, and I noticed that there was another fair value gap here. I still didn't buy though because it was too late. And it still didn't come to my 50%, but it came near it. And then it gave me a price action chart pattern, which is a Morningstar, and then it bought, right? But I'm still looking for it to come down here to this 4 hour because it looks like it's going to continue to pull back here. So my blue line on these zones is just 50% of the zone, okay? I like to see for price to come and touch 50% before I do anything. So that's what that blue line is. All right. So supply and demand. So 50% of the rectangle. Yep. So I just go to my rectangle, right? And I double click it and I press middle line. And that shows me 50% of the zone. 50% of the fair value gap, 50% of the supply and demand, 50% of the order block, 50% of support resistance. Okay. Cool. Okay. So supply and demand and order block is the same thing. I don't know why somebody came up with it and they was like, we're going to call it something different. Okay. But it's the exact same zone. So I'm going to delete this. Order block is defined as the last down candle before the up move. And I'm going to show you here. Okay. So you want to find an impulsive move, right? Let's come to the hourly. All right. So here we have this nice bullish up move, right? Although we do have these few red candles in between, it's not giving us an extreme pullback, right? It's mainly just pushing up. Okay. So order block is the last opposite color candle before an impulsive move. Last down candle, which is this red one, before this up move. That's an order block. Same as a demand zone. The demand zone is the last candle before the impulsive move. So this right here is an order block and demand area. Now, what people like to see is the exact same thing that we're looking for on the other one. You look for price to come back to the area and then buy. Or we look for price to trade through it, retest it, and sell. Okay? So this is a bullish order block and a demand area. Demand area is buy, a bullish order block is buy. Okay? Now, a reclaimed order block is the same. It's the opposite, like a inversion fair value gap, right? With that fair value gap, remember you look for price to come to it and trade away. And then with the inversion, you look for price to trade through it, retest it, trade away. Same thing with an order block. You look for price to come to it, trade away. With a reclaimed order block, you look for price to trade through it, retest it, reject it. Same thing. It's just that simple. Okay? So this is a demand area and a bullish order block. Now, let's find a sell area right here. The last up candle before a down move is a bearish order block or a supply area. And you just use that same rectangle tool and you go from the high to the low of that candle. Okay? And as you can see, price came to this area, it rejected it, it sold off some. Okay? Then it came through the area. We didn't really get a good retest of this zone, but it came back to another one right here. Retested it and then brought. Okay? So sometimes you won't get a picture perfect a lot of times you won't get a picture perfect. Price just comes back to the zone and rejects it, right? But if price comes underneath, and remember, it has to retest and reject in order for it to sell. Here, it came underneath, came to a whole different zone, and then began to buy. So price get back on top of this area here, then you know it's time to get back in, but let it close on top of this area. So technically you wouldn't have entered until this candle closed right here, because it has to close on top of this area. Because the worst thing is for price to get back to the area, trade through the area, and then come back and close underneath the area. Okay, and I think we can find an example. Let's find one. Here we have a fair value gap. Price came underneath, closed underneath right here on this candle, then came back, closed on top, then came back underneath, and then rejected and closed on top. Okay, this is why you want to wait for your candles to close. You never want to get in and just assume like, okay, it's falling. Yep, it fell. It fell. It came all the way down here, but then it came and closed on top of the zone. Okay, and that's for any zone. Support and resistance, fair value gaps, order blocks, supply and demand. It's for any zone. You want to wait for your candles to finish closing. Okay. What do I mean by close? Just the candle? Yes. So the candle. You want to wait for the candle to close. Okay. You want to wait for the candle to close, and you want to wait on a price action signal. Okay. So here at our zone, this bearish candle, it closed underneath the zone, right? But remember, this is a bullish fair value gap because our candle that created the gap was a bullish candle. So technically, we're looking for buys. But in order for this to become an inversion fair value gap and for price to sell, remember price has to come underneath and then retest and then close underneath. Okay? This one, it came underneath. It came underneath right here. It closed underneath, and then it brought, and the candle closed above this zone. Okay? And then it bought some more, and then it sold. But it didn't close underneath this zone. The candle body is above the zone. So it closed above the zone. And then price continued higher, as it should have, because it's a bullish bullish fair value gap. Do you understand that? You see? Guys, we're at 8,000. Can we get to 10,000? 2K more and then we'll be done. I ain't gonna ask y'all no more. Okay, so you see? This is why we wait on our candles to close. So remember, fair value gap and order block in the direction of the candle. Okay, so this candle is bullish. So this is a bullish fair value gap. So when price comes to it, it should buy, but you have to wait. Okay, and in order for it to be an inversion, right, it's no longer price. If it becomes an inversion, price is no longer going to buy. It's now going to sell, but you need that retest. So this is what you're looking for at all times. at all times, at any trade, at any zone. This is what you're looking for. Okay. So I can go to, I think it was EJ, and here on EJ, I'm going to delete my chart. Here on EJ, we had 1, 2, 3, 4, 5 areas of rejection, which gave us a support or a resistance area. Tell me in the chat. If it's at the top, is it support or resistance? Resistance. Great. So it gave me a resistance zone, right? So I'm marking my zone. Okay. Now, price came to the area, it rejected. Came to the area, 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 rejected. We finally got this nice, huge, impulsive candle right here. Okay? Nice, huge, impulsive candle. Then price came back, touched the resistance area, and then brought. Now there's a resistance area here, and there's a fair value gap. So if I mark up this fair value gap, you can get even more of an accurate entry because it came back to 50%. So it touched the zone, but it came back to 50% of this. So you can get even more of an accurate entry. Okay? And what did I say you're looking for? This. Exactly what happened. That's what you're looking for at these zones. Okay? And if I extend this to the left, I'm sure somewhere at the left, we're going to see this. Hold on. We're going to see this. Okay? So let's move to the left and let's find it. Oh, wait a minute. I forget EJ is at all-time highs. Gosh darn it. Well, not on this one. Well, maybe. Okay, here we go. Found it. Bam. What we got? Bam. See that? That's all we're looking for. And combined with our candlestick patterns and our chart patterns to let us know where price is going, right? So, like I said, if you weren't here for the Candlestick Bible, that is on the YouTube page. The link is in the bio to learn the candlesticks patterns that you want to look for at these zones, okay? But I can zoom in, and off the bat, I see this one right here, an evening star. It's a bullish candle, a doji, a bearish candle. Let me know that price is going to sell. None of these other candlesticks they're letting me know that they're going to sell. This is not a bearish engulfing because a bearish engulfing has to run the high and the low. So this is not telling me to sell. This is just a bunch of mumbo jumbo. This right here, I just said mumbo jumbo. This right here is another evening star, okay? But you would have gotten stopped out on this one, unfortunately. Let's see. I'm gonna put a short pattern on here. We got your evening star. You have your bullish candle, your doji, your bearish candle. You get in at the bottom of the bearish candle. Stop loss at the top of the candle that created the fair value gap. Price would have came up and hit stop loss. But you're still at the same zone. Okay? You're still at the same zone. So now we're just looking for other candlestick patterns to let us know that we want to sell. And this one came down, retested. This gave an inside bar. This could have been an entry. And then this gave a morning star. So you had two different entries here. Stop loss would have still been at the top of the high that created the fair value gap. And then this time you wouldn't have been stopped out. You guys, sometimes you're going to get stopped out, and it's okay to go back and reassess because sometimes you just enter too early. Okay. So it's okay to go back and reassess the trade and re-enter it. It's not okay to re-enter it 5 times, right? Thinking, okay, it's going to sell here, it's going to sell here, it's going to sell here, and then the price just continues to buy. That is not okay. Okay. But if price is still at your zone, it is okay to go back, reassess the chart, look over, see what you did wrong. Maybe you didn't wait on the price action pattern and you entered too soon. Okay? Maybe your zones weren't right. Sometimes you have to delete your chart and remark it up because you missed something. That's okay. Okay? But what you really want to do is it's called forward testing instead of back testing. I love back testing. Everybody pushes back testing, but it's nothing like being in the market live. I'm not telling you to trade the market live with your money. I'm telling you to mark your chart up, find your area, look for your confluences, and then put a sell and a buy tool along, right? This is a long tool. This is a short tool. And set alerts at your stop loss in your TP. Wait for the alert to go off and see what happened. If it hits your TP, great. You're seeing things right. Continue to do that over and over again. If it hits your stop loss, take a screenshot, go back, reassess. What did you miss? Okay? And then mark it up again. Do it over again until you're finally hitting your trades. Okay? TP is take profit. Yes, TP is take profit. TP is take profit. SL is stop loss. Okay. So that's basically it for our zones, guys. So let me know if did I delete it? God, to be more careful. How sway? Let's see. Can I get it back? Because I didn't realize I was on this chart. Undo. Oh, that's because this is EJ. Nope. Wrong chart. Who's supposed to be on CJ? If y'all didn't know, when you delete something, there's buttons up here, undo, redo, okay? So I just pressed undo 1,000 times. How often am I live? And are the trends explained in your YouTube? The terms. You know what? We haven't done the terminology call. I think I'll do that next. I did do an ebook though, and the link is in my bio. Okay. Can you DM me to get started? Sure, but we're getting started right here. What you need, babe? We're gonna do a terms video. I think I'll do that next. We'll do a terms video. All right. But these are our zones, and you trade them all the same. So let me know if is there a zone that you missed? Is there a zone that you want me to go over that you still don't understand? If not, then I'm gonna go and we'll mark up a chart, and I'll show you how I mark up my charts with these zones. So let me know before we go on to the next step. Let's see. Thumbs up in the chat if you got it. What strategy would be my favorite? Structure, just pure structure. Structure with my fair value gap zones, because structure lets me know what's going on, like my trends and if the trend is buying or if the trend is selling, right? If price broke structure, then I know that the trend is changing. So structure is definitely the favorite strategy. But I do structure and I do CRT, which is candle range theory. And I have videos on both of those strategies on my YouTube. You're new? Okay. Well, this is a new class. This is for beginners, right? So just ask a question. And that's what we have this time for. Trying to show y'all how to mark up zones. And if you don't understand, let me know. And I'll go back over it. Or you're new, like you just came into the class. Like it just scrolled across TikTok and you saw me. What's a zone? A zone is an area in the market that you want to look for to take an entry, okay, to enter the market or to exit the market. So that's a zone. And all of these are different kinds of zones: fair value gaps, inversion fair value gaps, support and resistance, supply and demand, order blocks, and reclaimed order blocks. All of these are zones. Okay. It's just a lot of times you'll hear people call it POI, which is point of interest. It's just an area in the market where you want the market to come to. Okay. These candlesticks, basically, where you want these candlesticks to come to. And then you want the candlesticks to show you what it's going to do at that area. Okay. So for instance, like if I just come to a trade that I'm in, is right here on gold. Okay. I had this zone marked up and price gave me an evening star. And it's also the second time touching this area, right? Well, first, we got our, let me come over. First, the price traded through it. It touched it once. It sold down. Came back to the zone again. And I'm looking for it to sell again. Okay? So that's a zone. It's just the area in the market to where you look for a price to come to. And then you look to see if you're either going to buy or sell from that zone. You knew you never done this before? Okay. That's cool. Just let me know what you don't understand. This is the hour time frame. Okay. All right. So next we are going to do a top-down analysis, right? A top-down analysis where I start from my monthly time frame. I go from my, oh, I'm sorry, that is hard to see from your phone. I go from my monthly time frame to my weekly time frame to my daily time frame to my 4 hour to my 1 hour. This website is called TradingView. They have free subscriptions, so you don't have to pay anything. Just make an account. You don't have to sign up for anything. Once you start to pay a subscription, you pay a subscription just to be able to like put more alerts on your charts or more indicators. It's freezing, guys. Now that's one thing that I've had issues with on TikTok is this freezing. So I apologize for the freezing, guys. But you don't have to pay for TradingView unless, you know, you get to the level to where you need more alerts or you need to add more indicators or something of that nature. But for now, just to mark your charts up and stuff, you don't have to pay for TradingView. Okay. So we can go back to, well, let's go to Euro NZD. And if you look over here in the corner, this is Euro, and then this is New Zealand dollar, okay? Am I trading crypto? No. I don't really trade crypto. I just hold crypto. I trade Forex and futures. All right. So we're going to go to Euro NZD, and we are going to do a top-down analysis, okay? And top-down analysis is where I go to my monthly chart, my weekly chart, my daily chart, my 4-hour chart, my 1-hour chart, and I mark my zones. And the purpose of a top-down analysis is to box in price, okay? So in trading, you want to find pockets that you can trade in, right? To where price will come to your TP, okay? So we are going to box in price. So I'm going to start on the monthly, and I'm going to zoom out. All right. And what I'm looking for is either a support and resistance area, a fair value gap area, an inversion fair value gap area, an order block area, a reclaimed order block, or supply and demand. Okay. You get to cut your trade on gold because buy is what? I'm in sales on gold. Okay, so I'm on my monthly. And on my monthly, remember we're looking for those rejection areas. And right here is where current price is. Here's a rejection area. Here's rejection. Here's rejection. Here's rejection. I have all of these areas of rejection right here. And I want to find either a fair value gap, an inversion fair value gap, or I want to mark up support and resistance, or I want to mark up supply and demand, or I want to mark up an order block. One of these is causing this rejection, okay? So I'm looking in this area, and just because my eyes are trained and I'm used to it, right here, I see a fair value gap, okay? So I'm going to take out my rectangle tool. I'm going to take out my magnet tool. I'm going to go from the previous candle to the candle after the fair value gap. I'm going to go from wick to wick. And once I draw that, we see we have 1 rejection, 2 rejection, and our current where price is at rejection. So this is a significant area in price. Now, me personally, I'm just going to take a horizontal line and put it on top of that 50%. And then I'm going to delete my rectangle box. Okay. So now I'm here in this area and current price has gotten on top of this fair value gap. I want to try to find a zone at current price. And then I also like to try to find a zone below current price and above current price. Okay. So if current price is here, I see this fair value gap right here. So I'm going to mark this area up. And I'm going to take my horizontal line and I'm going to put it on top of that 50%. And I'm going to delete that. Okay. And now I'm going to go back and look to my left and try to find a zone above this zone here. And off the bat, I see a rejection area here and a rejection area here. Okay. And they're in a similar area here and here. Okay. So here, I'm just going to mark a resistance level because I don't see any fair value gaps and I don't see a supply or demand area. I don't see, well, I do see an order block. So I see this down candle right here before this up move. So technically I can do support and resistance, or I can do this order block right here. Extend to the left. Okay. See that? So I'm going to stick with this order block and I'm going to put that line right there and then I'm going to delete this. So now I have 3 zones and I've kind of boxed in price, right? Now I want to come down to the weekly to try to box it in even further. I'm going to zoom over to my left, okay, because I don't have anything over here that I can go off of. So I want to go to my left and I want to see what made this area right here, what made price reject this area right here. So I'm just going to put a line right there. I'm going to put a line right there and I'm going to make it blue. Just so when I get over here to my left area, I can see what made it reject. So you saw all I did was mark the top of this area because something rejected it. Something made price reject it. I came back over here to my left and bam, right here. This is telling me that this is a zone and I just want to keep this area. I got rejection here. I got rejection here. I got rejection here. Okay. So this is telling me that this is an area that price will likely reject again. Okay. And then when it breaks through it, it's going to come back and retest it. Now, right here, I see a fair value gap. So this is what gave me that zone. Okay. And I'm just going to tighten it up and draw my fair value gap. and then replace that line. All right. So now I'm just going to come back to current price. And as you can see, we're getting closer and closer into price. Okay. Because right now, price is telling me that it's trying to buy and it's going to come back to this level. Okay. Now I want to come down to my daily. And I want to see what is price telling me here on my daily. We got all this rejection right here, right? There's a fair value gap here. See that? Now, I want to measure from this black line to this black line because I want to make sure that in between my zones, because this is what they are, we're trying to take price from one zone to the next zone. Okay, remember our entries and our exits. I want to measure it to see if it's a realistic zone. This is 677 pips. Okay, I took my measuring tool, which is this ruler over here, and I went from this zone to this zone. Okay, this is 685 pips on a weekly basis. Okay, if I go back to my weekly, I can measure any weekly candle just to see how much does this pair move during a week. So if I measure this candle right here, it's telling me that price normally moves about 200 pips a week. And that's on smaller average because as you can see, this candle is bigger than that one. And this one is saying 400 pips. But on average, I at least want to make my zones at least 200 pips because it's realistic versus 600 pips. So that's telling me that I need to break this zone down 2 more times, okay? What exactly is a fair value gap? Okay, let's go back to that real quick for this person. Come back to CHFJPY, okay? Fair value gap is when the banks, the institutions, or sometimes you'll hear people say the market makers, they put so much money into the market, okay? It just causes a lot of pressure and it creates a hole in the market, okay? And if we look, here's a fair value gap. This is a hole. But if we look at these other candles, as you can see, there's no holes. Each candle trades back into the next, okay? But when it doesn't trade back into the next candle, it leaves a hole in the market, and that's a fair value gap, okay? Kimmy, you got it? Kimmy Bear 30. Now, I just stopped it and went back to answer your question. Let me know if you understand or not. Okay. Well, maybe they left. All right. So, we were on the daily time frame and I was saying that from this zone to this zone, it was 600 pips. Realistically, on Euro NZD, the market moves at least 200 to 400 pips a week. So we'll just break it down into 200 pip zones. Okay. So within this zone here, I want to look to my left to find another zone. The live keeps freezing. I'm sorry. It's not even letting me know that the live is freezing. Normally when the live freezes, it stops on my end too. It's TikTok, guys. All right, so I'm going to come over here to my left. And within this zone, I want to find another zone. It's not on your end? Okay. Yeah, because normally when it freezes, it stops on my end, and then I normally stop talking. Okay. So within this zone here, is it this one? Let me double check. Yeah. Within this zone here, I see some hesitation here, here, and here, and here. So that's telling me that there's a zone here, okay? And right here, off the bat, I see a fair value gap here, and I see a fair value gap here. Now, when you have two fair value gaps, you can just mark both of them up and see how price reacted to both of them, okay? So this is my first one. I marked it up. We got some rejection here, and we come over to the left. We got rejection here, here, so and here. So it looks like the price reacted really good to this zone, okay? Now I'm just gonna delete it, and I'm gonna mark this zone up. All right, so we got rejection here, 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 here. Okay, so I'm gonna go with this one because we have more rejection points on this zone than we did the other one. Although price reacted to that one good, it's reacting to both areas really well, right? Another thing about marking up two zones closer to each other. Hold on. Let's get back to where I was. Okay. Another thing about marking up two zones closer to each other, this zone right here is closer to price than this zone. Although they're only a few pips away from each other, right? Well, it's actually 100 pips away from each other because we're on the daily, okay? So when you're picking zones, you want, when they're close to each other, it's better to pick the first one, right? Because you don't want to assume that price is going to automatically trade to this one and go and reject from this one or go and test this one, right? And when we're picking our zones, like I said, we're looking for exits. So my zones are my TP areas. My TPs always get smacked, if my trade is going in the right direction. My TP always gets smacked. I don't have to worry about if I'm going to be taken out of the trade or not. So if we're here on this zone, I know that my take profit is going to take me out of the trade versus me hoping that it's going to come to this one, but then it came to this one and rejected, right? I wanted it to come to this one, but it came to this one and rejected. Now I'm looking at my chart trying to figure out what's going on. Why didn't price hit my TP? It came near my TP, but it didn't hit my TP. See, the thing is, we want our TP hit, okay? We want price to take us out of the trade in profit. Sometimes stop loss get hits too, okay? Nobody has 100% winning trade record, okay? Nobody. Don't let nobody tell you that they do unless they show you their account. And I want to see their account too if they got 100%. All right. So now we are on our daily, and now we have this zone. And as you can see, price also reacted to this zone right here also. Okay. So now I'm going to come to the 4-hour. All right. So what do we have? If we zoom out on our 4-hour and we look at all of our zones, you see how price is reacting to all of our zones beautifully. Now this is our next zone that we're looking for Euro NZD to come to. Okay. So we got a break, we got a retest, price sold off. Price touched this zone 1, 2, 3, 4 times before it decided to buy again. Okay. Here, price traded above it. Okay. It came back and retested it. And then it came a little bit beneath it, retested it. This is what you call a fake out because it did not come any lower. But again, if your stop loss hit, right, it broke and retested. It gave you another opportunity to get back in. It's okay if your stop loss hits. Just readjust, okay? So this is all you're doing. This is all you're doing. You're marking up zones. You're waiting for price to come to your zones. And then you're using your chart patterns to get into the zone, okay? This one is a head and shoulder. This is the head. This is the shoulder. This is the shoulder. That's a buy pattern. But we'll go over those, I think the day after tomorrow. Because I just said we're going to do something else and I can't remember what we're going to do tomorrow. Okay? So the person who asked about liquidity, let me know if you're still in here. So when you're in one of the zones, how do you decide whether to buy or sell? You decide whether to buy or sell when price comes to your zone. You're looking for your candlestick patterns, okay? So here, price is at my zone. We're on the hourly. Price came underneath the zone. It came back up to the zone. My price action, let's go over here real quick. We went over the candlestick Bible, okay? And these are our patterns that we're looking for. We're looking for a bearish engulfing off of a zone to sell. We're looking for a bullish engulfing off of a zone to buy. We're not looking for these dojis. We're looking for a morning star to buy. We're looking for an evening star to sell. We're looking for a hammer or a pin bar to buy. We're looking for a shooting star or a bearish pin bar to sell. We're looking for a bullish inside bar, also known as a harami, to buy. We're looking for a bearish inside bar to sell at the zones now. We're looking for tweezer bottoms to buy. And we're looking for tweezer tops to sell, okay? The ability to have markups on the chart in between the different time frames is paramount. Good luck. What is the best way to trade divergence? We can talk about divergence in a minute. Is that only available with the premium? Is what only available with the premium? You need the Candlestick Bible. The Candlestick Bible, I have a free Discord channel. The link is in the bio, and the link to the Candlestick Bible is in there. And we also went over the Candlestick Bible. So I did a whole series on the Candlestick Bible, and the videos are on YouTube, okay? Layla, is that only available with the premium trading membership? Is what only available with the premium trading membership? Okay. The markups that remain in between time frames. Well, once you mark it up on one time frame, it shows up on all time frames. So no, that's not only with the premium. That's with all of them. Once you do something on one time frame, it shows it on all time frames. Okay? So back to the question, how do you know when to buy or sell, basically, right? So prices at our zone, right? As we can see, it played around in this zone for hours before it finally bought. It played around in this zone for 7 freaking days, okay? We're going to zoom in to our zone, and I'm going to look at my candlestick pattern, okay? So here, the first time price came to the zone, it came on top of the zone, and then it came underneath the zone. I don't have any candlestick patterns here that's going to tell me to trade. Just because I see this big bearish candle does not mean trade, because as you can see, price sold, but it went higher, okay? Right here, I have an evening star. I have an evening star pattern. Evening star, actually this isn't an evening star. Evening star, the middle has to be a doji. This isn't a doji. In order for it to be a doji, there has to be a wick at the bottom. So this isn't an evening star. Let's see. I have an evening star here. Okay, this is a bullish candle. This is a doji. This is a bearish candle. All right. You can get into short at the bottom of the bearish candle, stop loss at the top, and then TP should be at your next zone. And I see a fair value gap right here. So we'll just say this is our next zone. All right. When you take a trade, you want the trade to be a 2-to-1 or better. This trade is a 1-to-1, so we wouldn't even get into this trade. Now, if you did get in this trade because for some reason you just want to take the 1-to-1, you to see your stop loss would have gotten hit. So now, if you took the trade, you lost one. My strategy, I trade structure. All right. So now we're at this zone again, and we're looking for our price action signal to let us know if price is going to buy or sell. We're back at the zone, okay? And I don't have anything. Now, here, this, let me zoom in. I had to zoom in because I was trying to see if this is a bullish engulfing or not. And it is. Price ran that low. Price ran that high. So now you get in for a buy. Right here where the candle closed. Stop loss at the bottom of the candlestick pattern. TP at the next zone or the next high. So for here, just say the next high. All right. This would have hit TP because price did not come and hit your stop loss. Okay. And it follows the risk to reward rules. It's a 5-to-1. So even if you took this trade, you lost 47 pips, you came back and gained 184. So now you're up 140 something pips. Okay. Just by waiting for price to come back to the zone and then giving you a price action pattern. Okay. All right. So does that answer your question on how to buy or sell? We're looking for those candlestick patterns at our zones. Right. And then here, you really should have been just looking for buys anyways, because if we're looking at our trend and we're looking at structure, we got higher highs. Uh-oh. We got higher highs and higher lows. Higher highs, price gave us a higher low on the zone and then came back up to a higher high. Okay. Did that make any sense? Do you understand? This is the hourly. This is the hourly time frame, but don't get so caught up on time frames because you want to do top-down analysis anyways. You want to start at your monthly and make it down to the hourly and box in price, okay? So don't get stuck on the time frame. We just did a top-down analysis, but I can do another one. I want to remark up GU. Give me 1 second. All right. I'll do a top-down analysis on GU. I'm going to delete my chart, and we are going to go and start on the monthly time frame. Okay? So, on the monthly time frame, I want to look for my zones. Remember, my zones are fair value gaps, inversion fair value gaps, support and resistance, supply and demand, and order blocks and reclaimed order blocks, okay? And I want to find those closest to price. When you say monthly being, it's the beginning of the month. When I say monthly, I'm on the actual monthly chart. So if you look up here, it's an M. That stands for the monthly chart. So each candlestick was 1 month of price action. Do you need a premium plan to mark up the chart? Nope, you can do it with the free plan. Okay? So the monthly chart, each one of these candlesticks shows a month. Okay? So if we look over here on the ticker, this number right here, 1.3260, that keeps changing, that's current price. And then the countdown right here, we have 23 days and 20 hours until this candle closes because we're on the monthly chart. If I go down to the weekly, the time will change, the days will change, and now we have 3 days and 20 hours before this weekly candle closes. I come down to the daily, we have 19 hours, 13 minutes, 35 seconds counting down until this daily candle closes. On the 4 hour, we have 3 hours and 13 minutes left. The 2 hour, 1 hour and 13 minutes. The hour, we have 13 minutes left until this hourly candle close, okay? So each one of these up here is just the time for how long the candle is going to be open and when the candle will close, okay? So I come up to my monthly time frame to give an overall picture of what's going on, okay? And overall, I can mark structure, right? I have a high here and I have a low here. How do you add the time thing? It's not on there automatically. Let's go to settings. Okay, here it is. Settings, scales and lines, and then count down to bar close. If you just want me personally to yourself for a one-to-one, the link is in the bio. I do offer payment plans, but if not, I'm here, right here on TikTok until they kick us off and put us on M2. Did y'all know that we're gonna get a new app? Y'all know they've been fighting to take over TikTok for forever. So supposedly in September, we're supposed to be going to a new app called M2. So I'll be here. And then hopefully when we get M2, y'all will follow me there. So DJ Zeffy, you got it? So you do this. You right click the chart. You go down to settings, go to scales and lines, and then count down to bar close. And that's how you'll get it. See, if I uncheck it, you see it disappears. And then I check it, it comes back up. I think it's very important for y'all to have that on your chart. If you don't have it, please add it. Because like I say, you want to wait for these candles to close, right? You don't want to get faked out. So like it's 9:48 Central Standard Time, right? Let's just go to NAS real quick. And the way NAS candles will whiplash you. And we got 51 seconds into this candle, right? Let's just watch this candle. Let's zoom in. See how price is pushing up. But let's see if it closes at the top or if it turns around and leaves a wick at the top and closes at the bottom. We still got 16 seconds. Yeah, that's on the app also. All right. So you see how price moved up and down on this candle, and then this one just kind of jumped up to the next one. And let's watch this one because now you see how this candle's moving crazy. It was a full body bullish candle, and now it's trying to turn red. Like, what is it doing? It's important to wait on these candlesticks to close, especially when you are at a zone. Okay, it's important to wait for them to close. You see how this candle is acting? We got 18 seconds left. This is our current candle. Five seconds left. All right. Closed as a pin bar. But if you'd have got in, you saw how it just came all the way to the top and it was super bullish. And you're like, okay, yeah, we finna buy. Then you get in at the top of the candle and then the candle closes and now it's going in the opposite direction. That's the worst thing ever. Okay. That one right there was a perfect candle. You want to wait for the candle to close. Okay. And that's why I use my timer. And then I also move between my 1 minute, my 5 minute, and my 15 minute, right? Because I know that five 1 minute candles makes up my 5 minute candle, right? So I still got 3 minutes left in this candle. And then three 5 minute candles make up my 15 minute candle. Okay. Four 30 minute candles, not four. Two 30 minute candles make up my hourly candle. Okay. 4 hourly candles make up my 4 hour candle. And then four 4 hour candles make up my daily candle. And then five daily candles make up my weekly candle. And four weekly candles make up my monthly candle. Okay. You booked the one-on-one Zoom, but there wasn't a button to choose a time. Okay. DM me, and when we get off of here, we'll get you set up, okay? Highly favorite. You booked a one-on-one for the call, the breakthrough call. Yes, okay. DM me, and then when we get off of here, I'll get you set up. All right. So now, what were we talking about? Okay. I think we're doing a top down. So let's go back to GU. And I'm going to go back to my monthly chart. Okay. And I'm going to zoom out on my monthly chart. And now, if you just looking at this chart and from what we've been talking about as far as zones, where do you think my first zone will be that I'm going to mark? I wish I could give y'all like annotations to draw. But automatically my eyes are pulled to right here and right here because I see rejection, right? And then if I look over, I have a fair value gap. So this is going to be my first zone I'm going to mark. And if I zoom out, we can see price also respected this area over here. So this is going to be my first zone. Okay. And I'm just going to take my horizontal line and I'm going to put it on top of that blue line there. I like to get it as perfectly as possible. Okay. And this is current price right here. So this is the area that I want to see price come to next. Now I'm going to just delete that zone because I put that black line. Now, this is my next area that I want to see price come to if price buys. Now I want to look for a rejection area for if price sells, okay? So if my current price is this dotted line right here, I want to look underneath my dotted line for somewhere that has already given me rejection, okay? And off the bat, I see rejection, 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 okay? All in the same area. So that's telling me that there's a fair value gap or order block or something right here, right? And I see my fair value gap right here. So I'm going to mark this up. All right. So you see I marked it up, but none of these areas touched it. Okay. None of these areas touched it, but I got some rejection here, and then price currently just traded through it and kind of retested it. So I am going to keep this area here, but I also still want to find what was making price reject here. What in this area was making price reject? Okay. And here I see a fair value gap here. And then if I come over, I see an order block here. This last down move before this up move here. Okay. So I'm just going to mark this order block. All right, so if I delete that and I delete this, I want you to see that sometimes it's not always going to be picture perfect to where price is just going to come to it and just reject. Sometimes price is going to trade through it, okay? And then the candlestick is going to close underneath. Trade through it, the candlestick closed underneath. Price traded through it, and then the second candle closed underneath, okay? But in this area, it all rejected, okay? So I'm going to keep this as my other zone. So now I have 3 zones. Remember, I want a zone near price, I want a zone above price, and I want a zone below price, okay? Now I'm going to come to my weekly time frame. And if we just look here on our weekly, this is this week's candle, this is last week's candle, this is the week before last. Before the week before last, we got 1, 2, 3, 4 weeks of rejection, okay? DJ Zeffy, give me 1 second, I'll explain it. We got 4 weeks of rejection, okay? And then that 5th week, we got this beautiful bullish engulfing candle. Remember, it has to run the low and the high of the previous candle for it to be an engulfing, okay? We got a beautiful bullish engulfing, a beautiful impulsive bullish move. If I go down to the hour, you'll see all these 1-hour candles just straight buying up. But here on the weekly, it's just showing you one powerful candle that broke through this zone that all of these candles could not break through at first, okay? And then we got a break, and we got a retest. And then price is currently retesting it again, and I am looking for a buy on GU, okay? What's an order block? I'm going to come back down to CJ real quick and explain an order block, okay? So order block and supply and demand is the same thing. Supply is an area that you sell from, so supply will be at the top. Demand is an area that you buy from. Order block, you can have a bullish order block or a bearish order block, okay? So supply and demand, order blocks, exact same thing. What you're looking for is an impulsive move away. So we got this impulsive move away. The order block is the up candle before the down move, okay? The supply area is the up candle before the down move. You'll take that same rectangle tool, you go on the candle and go from the high to the low, and this marks up your order block or your supply area, okay? Your demand area is this down candle, okay, before this up move. Same thing as a bullish order block. Down candle before the up move. You'll take your rectangle and you'll draw from the high of the candle to the low of the candle, okay? So it's just another zone, and you'll treat it the same way as we treat the fair value gaps in support resistance. You just wait for price to come to it. You're looking for a break and retest, or you're looking for a rejection, okay? So that's an order block. So order block can also be, you see how we had this up move here, right? And then we have all these down moves. It can also be in between right here. So this is a down candle before this up move, okay? It doesn't always have to be just at the bottom. It can be in the middle area too, okay? But it has to be a nice impulsive move, okay? So here, this isn't really an impulsive move. It didn't break that last low. It just kind of came down and hit this last area, okay? So this is order block, and this is an order block. This is an order block, not this one. This one, because this gave us an up move. This just gave us one up candle. Yep, it creates a zone. Yep. These are the 4 different kinds of zones right here. Okay? All right. So let's go back to GU and finish our top down. Okay. So, what was I saying? Okay, so we got this bullish move, broke through our zone, price came back, retested it. Now I'm looking for price to trade up here to this next zone, but I want to measure my zones now. Okay, from this line to this line, I want to see, is it realistic? So from here to here, it's 322 pips. So I'm just going to take a weekly candle, any weekly candle. I'm just going to go with this doji. I'm going to go from the high to the low of the weekly candle using the using the ruler tool over here, okay? High to the low. And on a weekly average, this is telling me that during this week of this candle, GBP USD traded 221 pips. So a 300 pip zone is doable, right? Because if I come back here to this big zone here, this one was 400 pips. You know, it just depends on the week, if there's news, stuff like that. So I can keep a 300 pip zone, right? Or I can half it because something right here made price reject. So I can half it, and I can put a line up here and then change it to blue, and then look to my left to see what do I find over here that made price hesitate. And right on the dot, I see a fair value gap up in between all of these candles here that touch this zone. I see a fair value gap. So I am going to put a fair value gap here. Okay, let's just do this and mark this as a zone. All right. So now I'm going to go back to current price. And I have a zone here where price almost touched. Okay. And from here to here, it's 195 pips. It's very doable to get 195 pips on GU in a week, as you can see, because we measured our weekly candle. So now I'm going to come down to the daily. Okay. And I'm seeing that this zone right here is kind of wide. So I kind of want to measure this one, because if price does end up selling, I want to make sure I have an accurate take profit area. This is 382 pips here. Okay. So here, I can just put a line right here. Right here. I saw rejection here. I saw rejection here. I saw rejection here. This is just the simple what was resistance, price traded through, and made it support, okay? Or I can continue to look left and see if I see a fair value gap over here somewhere, okay? And I see a gap here, I see a gap here, I see a tiny one here, and I see one here. But I'm going to keep this line here because I see price is respecting this area. So this is where I'll just keep a regular support resistance zone, okay? All right, so now I have enough zones, right? I have one for just in case price buys. This is where I want to take profit, or just in case price trades through here and retest it. This is where I want to take profit. And then if price decides to trade even lower, this will be my other take profit area, right? So now we're going to talk about trend lines, okay? In order to have a valid trend line, you need 2 points of rejection, okay? So I have 1 point right here. You see price came down, rejected it, and then price brought. Price came down, rejected it, price brought. So now I can just take my trend line tool, and my magnet tool, and I'm going to go to my first point of rejection and draw it out to my second point of rejection. I'm going to double click it and then click extend line to the right. Okay, we're going to draw it out into the future because the next time price comes to this trend line, I want to see price buy. Okay, and if price doesn't buy, we just treat it as a vertical support and resistance zone. Price comes through it, retests, and sells. Okay. All right. Now, also, I want to see what trend I have on my daily. Okay. So I can zoom out and I can see clear as day, right, that price is making higher highs, higher lows, higher highs, higher lows, higher highs. Hopefully, this is our next higher low to go to our next higher high because we are in an uptrend, okay? So now I'm here on my daily. Price has come to my zone. It's retested my zone. It came a little bit into my daily fair value gap. It didn't come all the way to 50%. Oh, it did. It came just about to 50%, but close enough, right? And then closed on top of my zone, okay? Then it came back, retested it 1 time, retested it 2 times. So now I just want to come down to my 4-hour time frame and my hourly time frame, and I want to find a price action signal, okay? And even on my 4-hour, I see another fair value gap right here, and this is where we got 50% hit. Now, here, I got a pin bar, right? And with the pin bar, you could have gotten in at the top of this pin bar, which I was in this trade last week, but I think I'm finna re-enter now and stop loss below this low, okay? And price hasn't hit stop loss. It's just kind of been moving sideways for the past couple of days. It's been 5 days because we had the 4th of July holiday last week, and the market kind of slowed down on Thursday. Okay, so I caught this sell back to this zone, and then I entered this buy, and then I exited. I exited at like 20 pips in the negative because this was kind of a big stop loss, and now I am about to re-enter it because we are at this zone. Okay, we are at this zone, and now I have a Morningstar candlestick pattern. I have a bearish candle, I have a doji, and I have a bullish candle, okay? So I am going to re-enter this buy right here, and I'm going to put my stop loss right here below this pin bar, okay? And it's a 70 pip stop loss. Now, I can put my TP here at this zone, and this would be a 2-to-1 risk to reward because it says 2.3 right here. Okay. Or I can put my TP at this zone and do a 4-to-1. Now, I'm going to put my TP up here, and we'll talk about Fibonacci another day, but I'm going to tell you why I'm putting my TP here. In the market, remember, you're looking for a trend, right? And when you have that trend, let's go back to the daily, right? Remember, I pointed out the uptrend. When you have a trend, you also have a series of impulse, correction, continuation, right? And in the continuation, it just starts the next impulse move. Then correction, continuation. So now I have an impulse, I have a correction, and I'm looking for a continuation. Remember I said I was looking for a new higher high, okay? So if I come back down to the hourly time frame and I zoom back out, you can see it clear. You can see my full impulse. This whole move right here was my impulse. So I'm going to take my Fibonacci retracement tool and I place it at the bottom of my impulse. At the bottom, that's my 100 on my fib. Now, my 0 is going to be my last high. So you see we had like a pullback here, and then we had a pullback here, but this pullback went deeper than this one. So this is where my 0 goes, okay? The Fibonacci retracement tool measures your retracement, okay? So your retracement and correction phase is the same thing. Your Fibonacci retracement tool measures your retracement. So this is my impulse, my 100 to my 0, okay? Now, price pulled back, and it pulled back to this zone perfectly, and at this zone, it pulled back to the 50%. So on your Fibonacci retracement tool, real quick, I'm going to delete this, okay? On your Fibonacci retracement tool, we have numbers, okay? So your 100 is where the impulse starts. Your 0 is where your correction starts. Now, price can pull back to the 23.6. 23.6 is right here. When price pulls back to the 23.6, as you can see, it did right here. So if I just move my 0 over here to this high right here, you can see price pull back to the 23.6, and it continued. 23.6 on the Fibonacci is continuation. It means your impulsive move is not done, okay? So it wasn't done, okay? Even here, if I pull it down here, where you got this impulse and then you kind of got a little pullback, it stayed inside of this little area. It did not surpass the 23.6. So that let me know that price was going to continue, and it did. So then I pull my 0 up to the next little pullback, 23.6. Now my next pullback is here. It came down to the 50%. Before you get to the 50%, you have the 38.2. Let me move that over so y'all can see it. You have the 38.2. When price hits the 38.2, your TP is the negative 27, okay? Then price can pull back to the 50%. In our case, today, it pulled back twice. 1, 2, okay? Pull back twice. 50, price came to the 50, my TP is a negative 20%. Now, price can come all the way back to the 100. If it breaks the 100, this Fibonacci is no longer valid. But price, if it wanted to, it could have sold down all the way to the 100. And right here at the 100, we have another fair value gap. So it could have came back to this area and then bought, okay? Once you get to the 618, the 786, the 886, or even the 100, your TP1 is the negative 27, TP2 is negative 61.8. I can tell you this, the negative 61.8 takes all day and forever to get to. So we can look on GJ real quick. Okay? And GJ right now, I'm just going to delete my chart. We have the same thing that we did on G. You see this impulse? Correction, continuation. I put my fib on here. And I should have still been in this trade just because of what I know, but I got out at my zone. Okay. So price came back to the 61.8. I'm looking for price to come and hit my 61.8. Is it going to happen this week? I don't know. We don't have any news or anything like that. But this is GJ, and then I can go over to the future side and I can look at just the Japanese yen on its own. This is the Japanese yen. I'm going to delete my chart. Here on the Japanese yen, I have impulse, correction, continuation. I can put my fib here. Okay. Now this pulled back to the 382. TP was the 27. So TP hit. But price, there's still a fair value gap here, which is why price is still pushing down. It wants to come to this zone. When you have a zone near a Fibonacci TP level, take it to that zone. Okay? Take it to that zone because it's going to that zone. Like on GU, I'm going to go back, get my chart back. It took me back to GJ. GU right here, we have the negative 27, but there's a zone 17 pips above. Am I going to get those extra 17 pips? Heck yes, because it's coming to this zone. And it's a higher time frame zone too. Price is like a magnet to these zones, okay? So this is signal on GU, y'all. Y'all can get in GU. It's a 4-to-1. Do not over leverage. Stop loss below this pin bar here on your hourly. Okay. TP. Go to your 4-hour. Let's go to our daily probably. Go to your daily. Scroll over to the left. And find this area right here that's making these lower highs. I'm sorry, lower lows, lower highs, lower lows, lower highs. Okay? And you have 1, 2, 3 sections. The third section down on this big red candle, put your TP at the top of that big red candle. Okay? Let me know if y'all get in. I will post this on my TikTok, homepage or whatever. I'm gonna post this signal when it hits TP. Come back and let me know if you made some money or not, okay? So I will call that as a signal. I've been waiting on GU. I should have just held it. Sometimes I get impatient too, guys. Okay? I do. Okay, so that's top-down analysis. Let me know if you didn't understand anything. I'll go back over it. But my main thing that I wanted to get through today was these zones. So let me know if you don't understand the zones. Y'all, I do download these lives. I do download these lives and I upload them to YouTube. And I do have a free Discord. I have a free Discord and I have a Signals channel. The Signals channel is free for the first 30 days if you want to join. And then the Discord is just free. I'm here for free every day. Yep, GBP USD is GU. My broker that I use is CoinEx because I love MetaTrader 5. I love MetaTrader 5 because I don't have to calculate my stop loss in my head. I could just go on MT5, move my lines or whatever. It's going to show me on the side of my lines. I don't have to worry about it. So that's why I use MetaTrader 5. My broker is CoinEx. The link to my broker is in my bio. All right, guys. So Q&A. Let me know what questions y'all got. What questions do you have? Do you understand? So let's do this real quick. Let's do this. I'm going to go to my 4-hour. What is this called? This area right here. And let me get y'all the options. Dang it, I deleted it. Why I keep deleting stuff? So your options. Yes, highly favored. What they do? Fair value gap. Now, is it a bullish or is it a bearish fair value gap? Bearish. Yep. Because the candle that created the gap is a bearish candle. Okay. Now, if price traded through this fair value gap, right? If price traded through this fair value gap, came back and retested, and then brought from this area, what would this fair value gap be called now? And yes, Bible Buzz Daily. You be on it. You've been in here almost every day, too. I love that for you. So if this is a fair value gap, and then price decides that it wants to trade through it, come back and retest it, and then buy from this area, what is it now called? We have fair value gaps, rejection line, not quite. Fair value gaps, inversion. Yes, inversion, fair value gap. Good. All right. Now, let's see. I have rejection, 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 right? If I was to mark this area here as a zone, is this support or is this resistance? Right here. These three rejections. Would this be support or would this be resistance? Resistance. Good. Now this area's resistance. Price traded through it. Price retested it. And since price retested it, this area now becomes what? Support, baby. Y'all smart. It is bullish. It is bullish, but the answer I was looking for was support. Okay. Now, let's see. If I have a down candle before an impulsive up move, what is this area called? This candle right here. This down candle before this impulsive up move. It's actually called two things. What is it called? Order block. Yep, it is an order block. And what else? It's an order block, and then it's either supply or demand. So is this supply or is this demand? All right. So this is demand. Remember, demand is at the bottom and people are demanding to buy the product. Supply is at the top. You kind of have too many of the supplies, so now you want to sell the product, okay? So this is an order block and a demand zone. Now, if I mark up this area here, this up candle before this impulsive down move, what is this candle? This up candle before this impulsive down move. What is this area? Supply. Yes, it is a supply zone and a bearish order block. So you see I marked this area up and we look over to the right. Price broke it, came back, retested it, and bought from this area. This is a supply zone. Good. And as you can see, price also respected it here. All right, guys, so that's it. That's it. Y'all know y'all zones. Y'all know y'all zones. Remember, we have 4 different zones. That's a money sign. Hold on. 4 different zones. Okay? Zones are areas of interest where we're buying or selling. Our first is fair value gap and inversion fair value gap. I can't get none of my symbols right. All right. And then we have supply and demand. And remember, supply, we sell. Okay. I guess S and S. Supply, we sell. Hey, winning team, I'm good. How are you? And demand, we buy. Okay. And then 3, we have support and resistance. All right. Support is the floor. You're looking for buys. Resistance is the ceiling. You're looking for sells. And then you have order blocks and reclaimed order blocks. All right. And just a refresh on reclaim order blocks. Hi. Welcome in. Just a refresh on reclaim order blocks, right? Remember, this is a order block here and also a supply area. A reclaimed order block is the same as a fair value gap. So you know when you have a regular fair value gap and then price trades through it, retest it, and then it becomes an inversion. Well, you see it happen right here. Price traded through this order block, retested it. When it retested it, it became a reclaimed order block, and then it brought. Okay? Price brought through it, retested it, and then brought. Thank you for that, Charlestown. Welcome in, Mr. Captia. I don't know. Sorry about that. But these are our 4 zones, guys. All right. So I'm glad you guys came in today. We've been on here for 2 hours and 15 minutes. The link to my YouTube where these replays are at. So you just go back, right? Rewatch it and practice. Rewatch it and practice. Do not get into the live market just off of this, okay? Remember, you want to forward test. Forward testing is where you're marking these zones and then you're learning your candlestick patterns. Cup of tea. Okay. I was doing too much. We're marking these zones. We're looking for our candlestick patterns, and then we're just putting buy or a long tool on the chart, and then we're watching to see what it does, okay? But right now I gave y'all an entry on GU when I posted on my main TikTok page. Just let me know if you got in, and then I'm gonna let y'all know when it hit TP. Oh, you're welcome, Leia. I'm here every day. So I'll be back tomorrow morning at 8 a.m. Central Standard Time. That's when we trade live. And then I'll be back tomorrow evening, either 6 or 7 p.m. Central Standard Time for our next lesson, okay? All right. So, any more questions? How do you get to what? Highly favorite. I'm going to DM you. Again, if you want extra help, you want one-on-one, the link is in my bio. If you just want to be in the free Discord, the link is in my bio. YouTube link is in my bio. Everything you need is in my bio. Okay. How do you get it on Webull? So with Forex, you don't trade Forex on Webull. You trade Forex through a Forex broker. So Webull is more for stocks and stock options. Forex, my broker is CoinEx, but there's plenty of other Forex brokers. But if you're going to take my signals, I suggest you be on the same broker that I'm on, and the link is in the bio for that. Do I have a WhatsApp? No, but I have a Discord group. Okay, the link is in the bio. No WhatsApp. I can't do everything that I'm doing in Discord on WhatsApp. So like, this is the free group right here. You get daily inspiration. I got a link for the recommended broker. I have announcements. We have our rules. And then I repost the videos that I do here up in here. I haven't started getting homework. I need to start giving homework. And then we have an ask a question section. So if you just have a question, just put it in there. You'll get your question answered, and then free signals. I can't do all of that in WhatsApp because it's just one chat on WhatsApp. Yep. I'm getting kind of hungry. It's 9:30. I probably should have been 8. I definitely should have been 8. I kind of don't want to cook. I was supposed to meal prep today. That didn't happen. And I didn't go to the store either. It's a struggle. It's one of those days where I might just go to bed hungry. I don't want to leave the house, and I hate paying DoorDash fees. What's the difference between MT4 and MT5? MT5, when you put in a trade, they'll automatically calculate your TP and stop loss for you. MT4 doesn't do that. That's really much the only difference. They look exactly the same. Yeah, but I love MT5 just for the fact of I don't have to calculate it. I'm like, buy, then I move my stop loss. I move my little line to my stop loss, and it's gonna show me how much I'm gonna lose. And then before I even click buy, you can do like a buy or a sell limit, and then put your stop loss at your stop loss area, and then it'll tell you what you could potentially lose before you even get into the trade. So yeah, I love MT4. I'm sorry, MT5. That's my jam. Yeah. I first came out on MT4, and then if you're US, matter of fact, if you live in the US and you sign up for CoinEx, when they ask you what state you're in, put other, because technically we're not supposed to be on MetaTrader. Back when number 47 was number 45 or 44, whichever one he was, back then he had messed us up with the Russians, and they took us off of MetaTrader. So it's been a minute. And then that's when everybody has started making their own platform. Like Trade Locker has their own platform, and Sway Markets, all of them. They tried to make their platform look like TradingView, and it was getting all those glitches. And I was like, heck no. I had to figure out how to get back on MT5, y'all. I prayed about that thing. Because I was like, Lord, I can't do this. Like, I'm a chronic over leverager. Don't be like me, y'all. But you over leveraging on a small account, and it glitches, and it just shuts down for 3, 4, 5 minutes, and you're sitting there watching it, and then it shut down, and it ain't nothing you can do, and you ain't put a stop loss on the trade. I was like, no, this ain't working. Now I do still put stop loss. I put my stop loss on my trade now, but then it was stressing me out. Can you close all of your position at once? Let me see. I'm not sure. You can. Yep, you can. So if you click it, right, when you automatically just click the trade, it gives you these options. It says close position, modify position, trade, chart, and bulk operations. When you click bulk operations, it says close all positions, close profitable positions, close losing positions, close buy positions. So I didn't even know that. So yeah, you can close all of them at one time, which is helpful. It's nice. I also have a video on my YouTube for beginner traders explaining how to deposit money into MT5, how to create an account, and all of that stuff. So that's on YouTube also, and I did upload that to my Discord. Okay, guys, I have to go get food. Highly favored. I'm going to message you now. Let me message you right now, and let's get you set up. Or did you DM me? Okay, I see it. All right, I just sent you an email so we can get you set up. All right, anybody else want to sign up for a one-to-one? The link is in the bio. If not, I'll be here tomorrow, 8 a.m. Central Standard Time, and then I'll be back tomorrow evening, either 6 p.m. Central Standard Time or 7 p.m. Central Standard Time. If you click my name, the notification bell will come up. So just click the notification bell, and then TikTok will notify you when I'm back on, okay? All right. And then if you have extra time, go back and learn those candlestick patterns to help with our course. So this is our free beginner course, okay? Which broker do I use? CoinX. The link is in the bio. I use CoinX because again, I wanted to be back on MetaTrader, and they have like the best customer service that I have ever encountered my whole trading time. So it'll be 5 years next month that I've been trading. And when I tell you you can get your money within an hour to 30 minutes, now they are unregulated. They are unregulated, but they've been around for a long time. I haven't heard anybody saying that they've gypped them or anything like that. And I do know one time it took like 4 hours for me to get my money. When I tell you they have a Discord, so you can get in touch with them through Discord, you can email them, and they have a chat box on their website. I went to the chat box, I sent them a message, I had my money within 30 minutes. Sometimes, they're just backed up with processing requests. Okay. And then I also do try to make sure that I do a withdrawal on Thursdays versus Fridays because everybody's doing withdrawals on Fridays. Y'all are welcome. All right, guys. Anything else? Let the church say amen. We have some closing remarks. There's 33 people in here. God bless y'all. All right, babies. Y'all have a good night. I'll see y'all tomorrow.